You were right to point out that the volatility in the markets is due to the trade conflict between US and China.
It's a factor.
Let me get your insights on this. Do you think the root cause of the conflict is because China has clearly shown itself to be a rising power when it comes to technological innovation and prowess?
Yes. Yes, I think classically in history, when a rising power challenges an existing world power, there is plenty to argue about. It's a small world for these two countries. So these countries are going to bump into each other in various ways. Trade is part of it. Trade is the least important part of it. Technology is very important.
It's the root cause.
Well, there are three causes. I'll describe it this way. There is trade, but technology is probably the most important consideration because technology gives all kinds of strengths. It gives, if you read history, it gives economic strength, it gives military strength, and so on. And then if you take the third area, there are certain geopolitical geographies and world influence and alliances and all of those things that enter into it. In other words, so there are three areas I would say. There's trade, which I think is the least important of that. There is technology, which has both commercial and military implications. And there is the geopolitical, what regions, what influence, such as the question of the South China Seas and that whole area. That's obviously something that there's conflict about.
President Trump recently slapped 10% tariffs on another $300 billion worth of Chinese goods. Now, this culminated in a PBOC letting the Chinese yuan slide beyond the psychological 7 level. Trump has since then delayed some of those tariffs, but in your mind, does it somehow seem to you that we've now reached a new phase in the trade conflict? Are we now looking at a currency war?
Well, let me be clear. The PBOC did not push the currency down, okay? That is not currency manipulation. The currency has a supply and demand of its own, and the PBOC made clear that within certain boundaries, they'd like to keep order, but within certain boundaries, it is a market. And if you're in favor, not having no currency intervention is what the United States does, and the question is, will we come into an environment of currency intervention? I would say I would be more worried almost that the United States might enter an environment of currency intervention to weaken its currency.
And how likely is that?
I don't think that that's very likely, but what happens late in cycles, late in long-term debt cycles, when interest rates are not effective and quantitative policy is not effective, such as that which we have now, they will be less effective, then currency weakness is the common vehicle for stimulating an economy. Because if your currency goes down, in domestic currency terms, and you look at your prices of your stocks or you look at prices of assets, they tend to rise and it's stimulative. So I think we are entering an environment that over the next 3 years, you will see more currency wars, whether they're overt interventions or whether they're monetary policies that produce that. For example, the Bank of Japan, when it pursued its stimulative policies, it was two parts. Not only to make money very, very cheap and make the assets, therefore, unappealing in terms of providing interest rates, but actually the encouragement of investing outside of the country. So that has a depreciating effect on the currency. I think we're going to probably see more of those. So the environment over the next 3 years, I think, will be quite a lot more competitive in terms of the factors I'm mentioning, currency being one of them.
But when it comes to the Chinese, this breach of the 7 yuan level, this has not happened in the last 10 years. Does it somehow signal to you, given your experiences helping China grow its capital markets, that Chinese policymakers are getting more comfortable with a weaker yen to help deal with the trade situation?
First of all, I think the 7 level was, they said, and anybody who's been trading currencies for a long time knows that way too much is made out of a particular level. And so I think that they handled that appropriately. I think that the PBOC is very skilled in being able to create essentially what is a two-way market, so that it's not easy to bet against or bet for the renminbi, because if it becomes too easy one way or another, it becomes disruptive. So I think they manage that well around what is the supply-demand consideration. It's certainly the case that if you have a weakness, or particularly if you have an external account weakness, a trade weakness, that currency weakness is the natural course of that. It's stimulative, and it's particularly stimulative and compensatory for the export part of it in a weak economy. So you have your choices. How are you going to ease an economy? You can lower interest rates. You can do some quantitative easing. You can do some regulatory, what's called macroprudential moves, and you can weaken the currency or let the currency weaken. So I think that the market is determining the currency for the most part.
Would you be bullish on China still if the Chinese renminbi, the Chinese yuan, continues to weaken?
Again, the currency weakness is part of the natural adjustment process.
So you have no problem with that?
I have no problem with currency weakness, and I would also say I look at the health of the economy, and the health of the particular businesses that one is investing in, or bonds. Yeah. Chinese bonds offer an attractive interest rate. Now you have, as you look at that, is that more attractive, that interest rate, then the currency will have a depreciation. Questions like that are all tactical. The currency depreciation is just part of the adjustment process that takes place, because it causes other assets to rise. It causes equities to rise. For example, it has that stimulative effect like interest rate declines do.
Who can afford to hold out longer, the U.S. or China?
Wars have a lot to do with how they're going to be played. For example, the United States has a lot of its bonds held by China. It also has its own dependencies and interdependencies in various ways. So it's very difficult. Nobody can say who's going to use what pressure points in terms of the other. I'm not able to call who's stronger, but I think that it's a little bit scary that what we can, as we let our imaginations go, and we could see the various harms that these countries can do to each other in the process, and what that'll mean for the world economy. I think that that's the important thing. I couldn't call who will be the winner. In wars in history, there was no knowing who would be the winner. Okay, but we do know that in all of those wars, in one form or another, the consequences of those wars were really regrettable by anybody who've entered into it. Even those who chose to go into the war regretted the wars because the wars are so terrible. I don't think we know how this can evolve exactly. Once you get this tit-for-tat thing going, and there are all sorts of ways that these two countries can do each other harm, or do the world harm in terms of trade and other inefficiencies that are created in the capital markets, and inefficiencies in trade in the supply lines of producing things. It's a lot of sand in the gears, and it's a bad situation.
You brought up a very important point, because China is the U.S. largest foreign creditor, holding something like more than $1 trillion worth of U.S. treasuries. Does this somehow give China leverage? Could Beijing weaponize its holdings as part of the trade conflict?
Could they? Of course they could.
Or is the scenario unlikely?
Of course. When one goes into this new world, there are a lot of unknowns, okay? And you have to realize that there are different pressure points. There was a symbiotic relationship between the United States. The United States wanted to spend more than it earned, and use that to buy Chinese and other imports. As a result, they sort of both got what they wanted, which were different things. China wanted to get richer. China wanted to build a savings. The United States wanted to get that and really pay for it on credit. We have a debtor-creditor relationship, not just a trade relationship, and that can be a dangerous thing.
What are the chances of it happening?
I can't say. I can't say.
Okay.
I could say, as I say, as you get deeper and deeper into wars,
But you wouldn't rule it out?
I wouldn't rule it out, no.